Giant Anthropic has raised $30 billion in a Series G round, valuing the company at $380 billion. The company has said that the investment will help it boost research, product development, and infrastructure expansions. Rachna Dhanrajani joins us now with all of those details. Rachna, how significant is the raise in the broader AI race?
Right. Anthropic's latest fundraise is a signal flare for where the AI race is headed. The Claude maker has pulled in $30 billion in fresh capital, pushing its post-money valuation to $380 billion and cementing its position as the clear number 2 in frontier AI. The round, led by GIC, quote, with participation from D.E. Shaw, Dragoneer Founders Fund, Iconic and MGX. What is driving that conviction, though, is not hype alone. Anthropic says its annualized revenue run rate has climbed to $14 billion. The customer mix is moving sharply upmarket. Clients spending more than $100,000 annually have multiplied by 7x, while those paying above $1 million have jumped from just over a dozen 2 years ago to more than 500 now. 8 of the Fortune 10 are already using Claude. Enterprise adoption is now visible on the ground. And that's the case across artificial intelligence and not Anthropic alone. We just saw Siemens say that AI co-pilots are embedded in parts of its engineering and manufacturing stack. In India, Bajaj Finance continues to highlight AI-led underwriting, collections and servicing as core to its model. Accenture and Deloitte are deploying internal AI agents. So the shift industry-wide is now pretty clear that Gen AI is moving from experimentation to operating infrastructure, and Anthropic is trying to position squarely for that in future. Now, even as the recent IT stock sell-off briefly rattled the AI trade, now to put AI trade, it was now being termed as the SaaS apocalypse. But how much of that holds up, we will find out. But to put the valuation in perspective, at $380 billion, Anthropic alone is now worth more than the combined market capitalization of the Nifty IT index, which sits near $300 billion mark. Still, the ride is not friction-free. Elon Musk has publicly accused Anthropic's models of bias, and the industry has seen some departures from safety and alignment teams at both Anthropic and OpenAI. That's number 1 and number 2 in the industry right now. Microsoft AI CEO Mustafa Suleyman also warned that the most white-collar computer-based tasks could be automated now within the next 12 to 18 months. Anthropic CEO had also warned that soon jobs will get disrupted just a few weeks back. And we are seeing that play out now. Now, all of this unfolding is amid an extraordinary capital cycle. Big tech is preparing to spend more than $650 billion on AI infrastructure this year, as we saw with the quarter earnings. Now, this brings us to the real test for Anthropic, which is execution. Now, OpenAI spent the last 2 years locking in distribution and is now under pressure to deliver margins and monetization, as we're seeing. And Anthropic is nearing a similar inflection point because the funding is in, expectations are rising. So what comes next will determine whether the capital surge translates into durable platform power. Back to you.
All right, Rachna, many thanks for taking us through those details.